In this section, I'm going to cover the Dow Jones, the S&P 500, the VIX and the Nasdaq, all from a technical perspective. Let's kick off with the Dow Jones. Very interesting that we're trading above the 50-day and 200-day moving average. What's particularly interesting is the 50-day is cutting up through the 200-day. Now, that would be a golden buy signal, a golden cross. Again, not a perfect textbook case because both aren't pointing upwards. The 200 is flatlining, but nevertheless should be support around these areas. So really key areas for the bulls to hold this area. Momentum not stretched, mid-range circa 50, so the RSI is not giving us any secrets away. Again, everyone's talking about a pause for breath. We've had a decent rally this year, but again, from a technical perspective, the only danger you could argue is that we've had a lower high in place. But again, these moving averages should hold basically the sellers up. Let's move on now to the S&P 500. We had corrected sharply back to this support area at 2800. We've talked about the breakout to the upside. Again, we're above the longer term moving averages, the 50-day, 200-day. It looks as if the 50 is going to cut through the 200 sooner rather than later here. Again, the 200-day flatlining. So not a perfect technical buy signal, but nevertheless, okay, people would think of this as being a bullish action point. Momentum not stretched, RSI sitting in the sort of 50s, again not giving us any secrets there. Let's move on now to the VIX index. What a dull market this has been, given that so many things are going on in the world right now. Again, sitting down, nestling in its longer term moving averages. Really nothing to report there. Momentum not stretched, again in the 50s. What a dull looking chart. Let's talk about the Nasdaq now. This is basically, we've had some falls. I don't like the look of those 5 down sessions, sort of dark crow type formations, the candlesticks would say. That suggests in the medium term that you could have some weakness here. And again, we're drifting sideways. We're below the longer term moving averages. The momentum is crawling at best at the lower levels. This for me is not really a great looking chart right now because you are trading below the longer term moving averages. In terms of sectors and the likes, regional banks have fallen again sharply last week. We've had sharp up moves in consumer discretionaries and IT. Worth noting that IT is now the best performing sector for the year with return of circa 21% as of Friday. So finally, I think the outlook remains positive generally on the charts. For choice, the Nasdaq looks the weakest. And as we know, more often than not, the Nasdaq can be a leader and not a laggard. Thank you.